Onwards, we will discuss uh, this, the matter of fact. We have to discuss this thing. So, the increasing speed lowers working capital. So, what do you mean by speed? How do we measure the speed of the cycle? How do we measure the speed of working capital management? So, if we have observed uh, many cycles in a year, it means that the speed is high. So, when we observe lower number of cycles, it's mean the lengthy method is
Now,
means the speed is slow, right? And right, increasing speed lowers the working capital. So a firm can lower its working capital requirement if it can speed up its operating cycle, right? So if there are a number of transactions in a year, they can make more profit, and they don't want to manage a big amount of investment. They don't want to put big amount of investment on working capital. For example, if a firm accepts bank credit card like Visa or American Express, whatever, it will receive cash sooner after the sale is transacted than if it has to wait until customer pays its accounts receivable. Uh, so why do many merchants accept Visa? Why they promote? They are promoting uh, uh, sales on Visa, right? They are providing discount. Why? But why they are promoting for that? Why? Right? So if you purchase anything on credit card, right? Immediate after the sales, it will be credited to their merchant account, right? And the transaction in the sale is realized soon after the sales, right? So for an efficient manager, they have to shorten the uh, operating cycle period. Then they can increase the number of cycles in a year. When number of cycle increases, they can earn more profit. Here, in this diagram, you can understand the things here, right? You start to buy inventory, right? In raw materials, and you keep the raw material, right? And you keep the raw material and you convert the raw material into finished goods, right? And you sell the finished goods and you collect cash, right? Now, uh, the operating cycle can be shortened. How we can shorten the operating cycle? How we can shorten? So one cycle start from here, purchase of inventory until cash collection, right? When we collect cash immediately, then we can reduce this period to here, right? And also in other side, when we extend the period to pay to settle our creditors, say we purchase raw material on credit basis, the length of the credit period may be 4 months, right? Then it can be this kind of strategy helps to reduce the operating cycle, case conversion cycle, case conversion cycle, right? So these are the techniques. By using this diagram, we can understand the concept of how speed, how the case conversion cycle uh, helps to manage working capital. Any questions? Have you got clear? Right. Now we will move to a new area under working capital management. It's very important. It is estimation or forecasting of working capital requirement. Normally, you calculate operating cycle, right? In turnover period, case conversion cycle, right? Payable period, inventory conversion, right? These are all the calculations we have done based on the information provided in the question, in the example. So in the example, they will give you so how much opening inventory, how much closing inventory, the value of cash balance, the amount of receivable, amount of payable, right? This kind of things they already given to you. Based on that information, you do the calculation. But this situation is we have to calculate what is the amount of receivable, what is the amount of debtors, what's the amount of finished goods, what's the amount of raw material. That kind of things we have to calculate, right? In other side, right? In opposite way, reverse. So when we calculate how the requirement of working capital, we have to consider the things. Number one, the total cost incurred on raw material cost. How much we have paid for labors, how much we have paid for overhead. And number two, the length of time for which raw material remain in the store before they issued for the production. Simply, how long our raw materials are kept in our store before the production process starts. Third, the length of production cycle, a work in progress, the time taken to conversion of raw material into finished goods. So once you start making production, it will take some period of time to become a finished good. From raw material to finished good, in between there are some processes. The time taken for that processes is called uh, work in progress. And the length of sales cycle during which finished goods are to be kept waiting for sales, right? Once we make produced as a finished goods, and we have to keep that finished goods to our store in our outlet until make sales. Then after sales, the average period of credit allowed to our customers. Once we sell our item, we have to wait until we collect the money from our customers. And the amount of cash required to pay day-to-day expense of the business. So to run the business, they want a certain amount of money, say the labor charge, electricity charge, and the overhead charges, right? Unloading, right? That kind of charges. The amount of cash required for advance payment, if any, right? If you want to make any advance payment, so for example, the purchase of raw material is is very competitive, right? So to reserve our raw material, we have to make some advance payment to our creditors. So that kind of things we have to consider, and the average period of credit to be allowed by suppliers. And when we purchase raw material to our product, how long our suppliers grant us to settle the payment. So these are the things we have to consider when we estimate or forecast the working capital requirement. And the time, a lag in payment of wages and other overheads. And see pro forma working capital estimates. How do we estimate the working capital? This is for trading organization. Trading, you just buy and sell, right? So what are the elements in current assets? So we normally we can find all the times cash balance under current assets, receivables for how many months of sales, say for 4 month sales or 2 month sales, stocks, right? And advance payment, if any. So this amount equal current assets, and we have to deduct current liabilities. Under current liabilities, we can find creditors and leg payment of expenses, say wage payable, right? Electricity payable, like that. Then we deduct current liabilities from current assets. Then we will get working capital, and we have to make some provisions for uncertainty period. For fluctuation, we have to add some contingencies for unexpected events. So we can find the value of net working capital requirement. So this is for a trading organization. And for manufacturing organization, it is a little bit different. For trading organization, normally they purchase finished goods and keep the stock in the outlet or in the warehouse, in the showroom, and they make sales. That is trading, buy and sell. But in case of manufacturing concern, manufacturing organization, the operation is different. What they do normally, they purchase raw materials. They purchase raw material, raw material, and they keep the raw material for a period of time, and they convert the raw material into finished good. The period in between finished good and raw material is called work in progress. They are in the process of converting raw materials into finished goods. So in the production process, the conversion process, we will we will include labor, right? Direct labor and additional charges, say overhead, for example, electricity, rent, factory supervisor, so that sort of things, and stock of finished goods, right? In the finished goods, what are the elements? Element of cost: raw material, direct labor, overhead cost, and sundry debtors, raw material debtors, direct labor, and overhead. It's mean finished goods, right? And the payment in advance, if any, balance of cash for daily expenses, any other items, if any, right? So the total of these equal current assets, and we have to deduct current liabilities. First, we can find creditors. When we purchase raw material on credit basis, we can find the figure creditors, and lack in payment of expenses, say a wage payable, and any other expenses, electricity payable, water, utility bill, like that, rent payable, right? And working capital equal current assets minus current liabilities, and we have to add any margins, if any. So total net working capital, right? Right. Point to remember while estimating working capital requirement. First, a profit should be ignored while calculating working capital requirement for the following reasons. We are not concerned about the profit when making uh, sales, right? We ignore, because profit may or may not be used as working capital, right? So we cannot assure that the profit may be included in the working capital, so we can uh, include that. Even if it is used, even the profit is used in the working capital, it may be reduced by the amount of income tax, drawings, dividend paid. So due to these reasons, so we avoid of including profit from the calculation of working capital requirement. And right, calculation of work in progress, very important one. Calculation of work in progress, it depends on the degree of completion. So it's mean we start to convert raw material into finished goods, but the work is not yet completed. As regard to material, labor, overhead, so we spend labor and overhead in addition to materials, raw materials. However, if nothing is mentioned in the problem, like recall that have you studied process account? When do the sum under the process accounts, so they will give us information, right? The item is completed 100 percentage in terms of material, 50% of 50% of labor charges, labor has been used, 20% of overhead has been used. This kind of information they will give you. So that's the thing. If there is no information like that, right? If there is no information on percentage of completion, right, then take 100% of value as work in progress, because in such case the average period of working progress must have been calculated as equivalent period of completed units. uh, I want to add some points to this slide. Right. First, if there are no information regarding, so what the percentage of completion, you can assume that 100% of raw material has been utilized. 100% of raw material has been utilized, and 50% of labor and 50% of overhead has been utilized. It is common rule, right? So you have to be very careful about on work in progress calculations, right? So I repeat again, when if there is no information regarding the percentage of completion, we have to assume 100% on raw material. For others, say overhead and employee wages, we have to consider 50% of completion. Right, we can get the clear idea using the sum below, right? Calculation of stocks of finished goods and debtors should be made at cost, right? The finished good and debtors should be made at cost unless otherwise asked in the questions. And we have some synopsis. Right, if you collect receivables faster, you receive your money from your customer faster, then you release the cash from the cycle, right? You can shorten up the cash cycle. And collect receivables is slow. It means your receivable shock up cash, then uh, all your, right, the case cycle has become extended, slow, become your business becomes slow, and get better credit in terms of duration or amount from suppliers. Right, in suppliers point of view, if they are grant you uh, the longer periods, you are happy because you have more time to settle the money. And it can be when the supplier give you longer period to settle the credit, then the case cycle will be shortened, then your speed will be increased. You increase your cash resources. And shift inventory faster, right? You buy the inventory and it's moved very fast, and you mean you free up cash, right? You make more profit. And more inventory starts slower, then your inventories are not move fast, then it means you consume more cash, right? Here there are some formulas. How to calculate raw material, right? How to calculate raw material. The funds to be invested in raw materials Inventory may be estimated on the basis of production budget, right? You are very clear on how to prepare budget, master budget, production budget, inventory budget, labor budget, overhead budget, sales budget, a lot, right? The estimated cost per unit and average holding period of raw material inventory by using the following formula, right? Very simple. Here, estimated production units, right? I have some very basic questions. Please respond, right? At least you respond via chat box. So, estimated production units into cost per unit. How do you get? What do you get? Production unit into cost per unit. It's equal what? This understanding, the basic understanding is very important uh, for you to understand, right? Number of units into cost per unit, you will get cost of sales. Not correct answer. Any answers? Not cost of sales. Cost of goods. Cost of raw material, not cost of sales. Exactly. Any other suggestions? Estimated product into cost per unit. Total production cost. Total production cost of inventory, right? It is for annual, right? Say for example, 1000 units production, 1000 units, and cost per unit 10 rupees. How much total production cost? 1000 into 10 equal 10,000 rupees. This is for annual, right? To convert this annual figure into monthly figure, what we have to do? What we have to do? Please respond. So we will get annual figure. We want to convert the annual figure into monthly figure. What we have to do? Any response? Any response from your side? How we can convert annual cost into monthly cost? How? Very simple. We divide by 12. There are 12 months in a period in a year. When we divide annual cost by 12, then we can get monthly production cost. Or to find the daily cost, a day production cost. How to calculate that? We divide by 365. Right. So how do we calculate a weekly production cost? Weekly production, we divide by, what's the number? Yes, exactly. Yes, Fatima Amir, good. 52. We have divide by 52, right? Good. Right here, every formula, right, come up with a logic. If you understand the logic, it is very easy to remember the formulas. You are never ever confused, right? Here, so estimated production unit into cost per unit, then we will get annual cost, and we divide by 12, then we can get what? Monthly production cost. Monthly production cost. Here he keeps raw material for 1 month or 2 months whatsoever. So if we keep for 1 month raw material, we just multiply by 1. If he keeps uh, inventory for 2 weeks, we just divide the total production cost by 52, and 2 weeks. That's all. Like work in progress. So work in progress. Here, the first one, the calculation of raw material of inventory. In the balance sheet, you have to find out so how much raw material balance will be. So this is the equation. Second one, the work in progress. How do we calculate work in progress? So you have already studied that a cost has three elements. A cost has three elements. What are those? Raw material cost, labor cost, and other cost. It's called overhead cost. So work in progress mean the production process already has started but not yet finished. Which means raw material has been used and some employees are working on that. So therefore, we have to add labor cost, and there are some other costs, electricity and other rent charge, other other direct cost, direct overheads, right? Estimated production unit into 12 months or 365 days or 52 weeks, and estimated working progress cost per unit, and average working progress holding period, right? And the same principle will be applied to finished goods, receivables, and trade payable. So liabilities, right? Liability side, trade payable and direct wage and overhead, right? You may have many confusions on these formulas. So there are a lot of formulas here: 1, 2, 3, 4, 5, 6, 7. Don't worry, it's very easy. So once you have uh, understand what is the logic behind this formula, it's very easy, right? Don't worry. Right, I'll give you 2 minutes. Please read this question. Please read this. Before to the sum, we have to have a clear understand what we are going to do. Without knowing the objective, so any works are useless. So invest 2 minutes here. The question simply asks, from the following information, prepare the working capital requirement. Forecast. Working capital requirement. Forecast. Production during the previous year is 60,000 units. Right. So take some notes. Right. Take some notes from this question. I will do this one in Excel. Right. We'll take some notes. Right. Right. Annual production equal 60,000. Production. Annual production equal 60,000 units. And the planned this level of activity would be remained in the present year. And the expected ratio of the cost to selling price, raw material 60%, direct wages 10%, overhead. So we'll take that one. So right, we want raw material cost. It's equal 60%, and wage, labor, direct labor 10%, overhead it's equal 20%. Right. And what else? The raw materials are expected to remain in store for an average of 2 months, right? So raw material will be keep for about 2 months. So raw material they will keep for about 2 months, and direct labor. Each unit is expected to be in the process for 1 month. The raw material being fed into the pipeline immediately, and the labor and overhead cost occurring eventually during the month. Right. So they are talking about a work in progress. So how long it takes to finish a product, to convert raw material into finished goods? How long it takes? How many days or how many months it takes? Please respond. Work in progress. Work in progress. How long it takes? It takes 1 month, right? It takes 1 month. Right? Right. And each unit is expected to be in the process for 1 month. It's mean work in progress equal 1 month, and yeah. Right. Finished goods will be stay in the warehouse, awaiting dispatch to customer for a stock approximately 3 months. Debtors, right? It's talk about debtors. 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 Yeah, we are giving 3 months credit, and for finished goods. So finished goods we keep finished goods for about 3 months, and credit allowed by creditors is 2 months from the date of delivery of raw materials. Creditors, so they are give us 2 month credit, and credit allowed to debtors is 3 months from dispatch. So we also giving 3 months, and the selling price is selling price equal 50 rupees, so 5 rupees. And there's a regular production in cycle, and wages and overheads are paid in 1 month. First, sorry, wages and overheads are paid on the first of each month for the previous month. It's mean, so 1 month credit. So wage and overhead 1 month, and this is 1 month, right? The company normally keeps the cash in hand to extent of 20,000 cash in hand, cash. Anything to ask up to this level? Anything to ask? Anything? Please respond immediately. We have to finish it. We can't take more time for this. Okay, we'll proceed. So these are the synapses of the question, right? And we have to prepare a balance sheet. So we know the structure of the balance sheet: current assets, and we have current, right? Under the current assets, we have what? We have raw material, right? We have raw material, and we have work in progress. Work in progress. Under the work in progress, we have uh, yes, raw material, labor, and overhead, and finished goods, and we have what? Debtors, and also we have what? We have cash, right? We have cash, and under the current liabilities, what we have? Creditors, and wage payable, and overhead payable, right? Right, we have to find the figure. We have to find the total current assets, and we have to find total current liabilities, and we have to find net current assets. Net current assets equal current assets minus current liabilities. Current assets minus current liabilities, right? So we have to find the values of raw material, work in progress, finished goods, debtors, cash balance is given. How much cash balance? How much cash balance here? How much cash balance? Anybody of you?
20,000.
Very good, exactly, right. 20,000. I will go a little fast, right? For anybody uh, don't understand, please stop me and ask, right? We put the figure cash balance, right? And we first work out on how do we calculate raw material cost, raw material, not cost, how much amount of stocks we have on, right? How to calculate how much annual, right? How much annual cost. Before that, we have to do some working, right? Here, so we don't know how much raw material cost. So, but we know the selling price. The selling price equal 5 rupees, right? So the information is provided that the 60% of selling price equal to raw material. Then how much? raw material? Please respond very fastly. Selling price into 60%. How much?
3.
So, yeah, 3. Good. 10%. Right, 3. Here, direct labor and overhead. Right? Clear? Clear? Right. Now we are going to calculate annual cost, annual raw material cost. We know that how much per unit cost? Per unit cost of raw material, how much? How much? Raw material per unit? 3 rupees, right? Raw material cost 3 rupees. How many units in a year production?
60,000.
Very good, 60,000, right? This is for annual or a month. This cost 3 into 60,000 annual cost or monthly cost.
Annual.
Then we have to convert this annual cost into month. Then we divide by 12. Right now it's become monthly cost. Right. Then how long we keep our raw material in our warehouse store?
2 months.
2 months. Then we simply 2, right? How much? How much? Here 3 rupees per unit. So in the year 60,000 units, and we have to convert into a month. Therefore, we divide by 12. Then we will get the monthly raw material requirement, and we have to keep the raw material for 2 months. So therefore, how much the value? The answer 30,000.
30,000.
Very good, 30,000. Right. And finished goods. Finished goods. And finished goods include what are the cost? Finished good include what are the cost elements? Cost elements, raw material cost, how much? 3 rupees. Direct labor cost, 50 cents. Overhead cost, 1 rupees. Total cost per unit, how much? Total cost per unit,
4.5.
4 point,
4.5.
yes,
5.
4.5. Then 4.5 per unit cost. We are producing 60,000 units in a year, and we have to convert into month. So therefore we divide by 12, and we keep the finished good for how many months? How many months?
3 months.
3
3
months.
months.
3 months, right? Then the value is 67,500. Right, 67,500. And right, so work in progress, I will come here later. Right. And debtors, so when we get debtors balance, we have to get not selling price, we have to take the price, selling price before margin. It's mean cost of the production, cost of sales, right? Cost of sales. We not include any profits here, profit margin here, right? Here in this example, how much production cost? How much production cost? 4.5 rupees. 4.5 rupees. And 60,000 units we are producing in a year. And we have to convert into 1 month. So divide by 12. And how long we are provide to our customers to settle? How many months? 3 months. Then it's equal how much? 67,500. Right? 67,500. Now we move to current liabilities. Right? Current liabilities. And right. How debt creditors arises? How, when we purchase raw material on credit basis, raw material cost, sorry, creditors will arise. So we purchase raw material on credit basis. So how much raw material cost? How much raw material cost? How much raw material cost?
3.
3 rupees.
3.
Yes, 3 rupees. And we plan to produce 60,000 units, and we have to divide by 12. And how long they are giving us to settle? 2 months.
2 months.
2 months. Then what's the answer? 30,000. 30,000, right? And wage, how much cost? Labor charge, how much? 50 cents. Labor charge equal 50 cents. 0.5. And production units 60,000 divided by 12. And how long, within how many months we have to pay? Within in
1 month.
1 month. Then it's equal 2,500. And what about overhead? Overhead cost equal 1 rupees per unit. 1 rupees into 60,000 units divided by 12 into, so it should be settled in 1 month. So what's the answer? How much? Equal 5,000. Right? And we need only one thing. What is that? Calculation of work in progress. Calculation of work in progress. Work in progress means simply we have started the production process, but we are not yet completed the production. So it means simply we have start making value addition on raw materials. Therefore, the work in progress include raw material cost, labor cost, and overhead cost. These are value additions. Right. How much raw material cost? Raw material, how much per unit? 3 rupees. And production is 60,000 units per year, and we have to divide by 12. And it takes how many, how many, or how many months in the
1 month.
1 month? Right, good. And it's a work in progress, no? So we have to assume that all 100% all 100% of raw material has been utilized. So therefore we have to 100%, 100%, right? If you are not clear, please ask. How much raw material cost? Raw material. How much? Right, clear? And the labor. For labor, how much? Unit labor cost 0.5 into 60,000 units divided by 12, and it keeps for 1 month. But it's a work in progress. No, it's a work in progress. We have to assume 50% of completed. 50% of the work has been completed in terms of labor. You have to assume, but there is no information regarding that percentage. If the percentage has given to us, we have to apply the percentage, the given percentage. But in the scenario, there is no information regarding the stage of completion. Therefore, we have to assume 100% completion on raw material, 50% completion in other cost. Here we put 50%. How much? 1250. And overhead cost 1 rupees per unit into 60,000 divided by 12 into 1 month into what?
50%.
Very good, 50%. Then 2,500. Right, here total. Here we calculated raw material balance, work in progress balance, finished goods, debtors, cash. Total current assets how much?
48,750.
8,000. Is it? Please check your answer. And current liabilities and current assets minus current liabilities. This value current assets minus current liabilities. 16,000. Is it answer? Correct answer? Is it? Is it correct answer? See the calculation.
Yes, sir.
Okay. Hmm. Anything to ask? Questions? Any doubts? Anybody else? I will send you an attendance. Do you have any classes? 3 to 4? If you are free, we can do another sum.
We have lectures, sir.
Okay, then I will send you an attendance sheet. Please mark your attendance. Uh, Okay, I will post it in chat box. Okay, I have sent you the attendance link.